Hey everyone, Couch Investor back to another video for today. So as the title might suggest, earlier this week I did open a tiny trading short-term position in Robinhood. Why? Well, I'll try and explain in this video. Now Robinhood, of course, since going IPO, it has had highs and lows, and I think right now we have seen the lows already. Now the highs during the pandemic, we all know what happened there. Then we all know what happened with the GameStop scandal, etc., etc. And then, of course, a bear market hit as well. So less people, less retail investors are going to invest during those times, which is a shame because during bear markets, you should be looking towards better opportunities. And so right now, this year, because we've had better sentiment in the stock market, not in the overall macroeconomic environment, but in the stock market, tech stocks, growth stocks have seen some positive momentum. And if we are to believe this graph here from Ricky Sandler on Twitter, you can clearly see here that retail investors' net buying demand, both in single name and ETFs, for the month of June are on track to set a monthly record going back to early 2019, which in my opinion is a bit strange because there is more right now than back then, back when the hype was at its highest. But still, pretty good when it comes to a company like Robinhood, because the more people that transact, the better for them. But since they've seen less people transact, there is something else that has pushed their revenue up. We're going to have a look at that a bit later. But not only are we looking towards revenue growth, we're also looking for profitability. And of course, like many other companies out there, they have been laying off their employees. I think the first round was around 30% or so. Then more recently, they reduced another 7% of full-time workforce. Now, some of you might have noticed that Ark Invest have been buying some shares of Robinhood lately, around $5.5 million worth of it, by also selling Tesla shares. So yes, a lot of people are asking the question, why are they doing that? Well, it's just a thing that happens a lot when a stock that they own has reached a certain percentage. When a stock has gone up significantly, they usually take profits and buy something else. And usually, what is this something else? What it's a position where they are significantly down, as we've seen in the last video where I went over the 3 companies that they bought. I think it was PagerDuty, Teladoc, and Twilio. Now, with regards to Robinhood, you can see here that as the price went down, well, they have been increasing their position or the amount of share that they own over time as well. You can see here that the weight rank across all funds is number 17, so still not really in the top 10, and it's in the Ark F, Ark W, RKK ETF. Now, one extra thing before we go and look at the numbers, it's the acquisition of the credit card startup X1. So they acquired that company for around $95 million. And there is here a interesting thing on TechCrunch, which usually doesn't really happen. But they say here, so they acquired a credit card startup X1 for $95 million. And yes, a lot of people have been asking questions. He said something interesting, which could be one of the reasons why Robinhood bought this company. So by using credit card points to buy stock instead of cash or their savings, we feel this is a safe way for many consumers to start investing. There is no real downside as their investing is technically free. So basically, yes, the more you spend with that card, the more points you will get on your account. I think it's also interest free and they're not looking at your credit score. They're looking at your income, current and future projections or something like that. Now, it is interesting here as well. So knowing that they paid $95 million for that business, so the CEO told us last December that the company saw $3 million a month in revenue last October, giving it an annual revenue run rate of $36 million. So they paid what, around 3 times sales or so, less than 3 times sales. Pretty okay deal for a company that is growing, supposedly. Of course, we're going to get way more information during the next earnings call when analysts will probably ask about this acquisition. Now, if you're enjoying this video so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So when it comes to their Q1 financial results, this is basically the major overview. So net cumulative funded accounts is at 23.1 million. And I think the latest update that we got for May was that it remained flat. Then monthly active users, $11.8 million. I'll talk a bit more about that later on. Net deposits, $4.4 billion. So that's 29% annualized growth rate. Very, very positive thing to see, especially after these bank runs and failures of a bank. So trust in the business, despite all the internet scandal, remains at a good level. Then total net revenue increased 16% quarter over quarter, $441 million. Of course, there is net interest revenue there as well, which has been increasing quite nicely in this high interest rate environment. Adjusted EBITDA becoming very, very good here, $115 million. That's up 40% quarter over quarter. GAAP net loss is a bit tricky here. It's $511 million, but it's actually 26 million. I'll explain later. And then earnings per share, well, the same results there. It's much closer to profitability than what you think. So monthly active users increased, yes, quarter over quarter by around 400,000 to $11.8 million. So maybe Q4 was the bottom, and right now we are regaining traction. Of course, still far, far away from the peak here in Q2 2021, 21.3 million there. Now, of course, we know why that happens, right? Pandemic, the hype, everybody was investing left, right, and center in GameStop, BlackBerry, in crypto, etc., etc. And then after that, well, the hype died down, the scandal, bear market, and we reached this point. Now, as for net deposit, again, this is maybe a better graph where you can visualize what has been happening. So net deposit annualized growth rate was 29% in Q1 and 18% over the past 12 months. And again, I'll repeat it. This has been happening in an environment where we've seen bank runs, we've seen trust in financial institutions drop a bit. So it's very nice to see that they are seeing some inflows instead of outflows. And then, of course, average revenue per user, very important metric here. So ARPU increased to $77, up 16% sequentially. And here it looks like the bottom was in Q1 2022. Now again, since that peak, of course, they've lost a lot of customers. So when you look at the average revenue per user, of course, the users have dropped down, but revenue has dropped down as well. So you cannot say, oh, the average is up because they've dropped users. No, they've dropped users, but revenue has been going down as well. Otherwise, yes, you could say that this number is artificially going up, but actually the business is suffering. And maybe we can better visualize this here. So total revenues for this quarter, $441 million, up 16% sequentially. And here you can see the full effect of what happens in a high interest rate environment. We've seen this with Coinbase as well. This is this color right here, the bright green, so net interest revenue. In Q2 2022, let's take actually Q1 2022, so we can do the year-over-year comparison here. It was $55 million back then. Q1, $208 million. So of course, you can see transaction-based revenue have been dropping down significantly because we're in that environment. They are losing users, so that is what's happening. But the hit is now way smaller because of the net interest rates revenue. Now you might say, okay, but maybe Powell will stop raising rates. Maybe rates will be cut eventually. Well, eventually they will be cut, but sooner rather than later. And so this segment will not contribute as much to the business as it is doing right now. And you're 100% correct. But when that happens, usually tech stocks, investing in tech stocks, investing in high growth companies become more favorable. And so usually what will happen is that transaction-based revenue will take over yet again. And now with regards to net loss, I told you it's a bit tricky. So $511 million of net loss in Q1, but 485 million of those 511 million was because of the 2021 Founders Award cancellation charge. Otherwise, it would have been a net loss of just $26 million. And of course, with all the layoffs and they becoming a bit more, let's say, lenient, like every other big company out there, they're trying to do more with less. It won't be surprising if we see a profitable quarter already in Q2 or later this year. Because if we're looking here at adjusted EBITDA, that's up over 250 million and adjusted EBITDA margin is up over 70 points. So last year, EBITDA margin negative 48%. Right now it's positive 26%. And EBITDA here, $115 million, last year, same quarter, negative $143 million. So they're doing the right thing. The charts here indicate that we're going the right way. And last thing here, and by the way, this is interesting because they say here we like this strong balance sheet, which was around $6 billion in corporate cash and investment. So they say they like the strong balance sheet position that gives us flexibility to run and invest in our business while staying flexible to evaluate opportunities for M&A, which of course they took that opportunity by acquiring X1. Now, when you have approximately $6 billion in cash and your market cap, well, by the time of making this video, is close to $9 billion, in my opinion, it's worth the risk. The risk here is way less than the reward, in my opinion, and that's why I took and opened a small position in this company. And yes, if we have a great earnings report, probably I do feel that this stock will pop and go up. And if it's up significantly, good enough for me, I'll exit. I have no plans on holding this company for the long term. But of course, do share your thoughts down in the comments below. Have you been buying into Robinhood? Maybe have you been looking into that company? Let me know down in the comments below. As you can see on the weekly chart, we try to go over the 200-day moving average. Right now, it didn't quite work. Let's see what happens in the next couple of days. So that will be it for me from this video. Of course, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.